from thefinancialbulls.com, and I'm here with your biweekly market recap along some setups for the following weeks. So, looking at a 6-month daily price graph of the S&P 500, as we usually do, this is the way we measure the overall health of the broader market. And basically, the last time we had a biweekly market recap, it was around this day right here, and then it was a nice Friday, and then we had follow through the following week. We retraced a little bit back, and then we're kind of hanging out in the middle of this part of this range. And I mean, this is kind of rudimentary to trade based off of this set ranging pattern where you have support at 203 and resistance at 212, but that is really the only trading methodology that the market is giving you right now, just because, as you can see, the moving averages are flat basically, so there's no trend, there's no way to trade with the flow or the momentum. So basically the only way to trade this market is basically just trade off this support and this resistance. And on top of that, fundamentally, there are really no big data points coming out soon. I mean, it's August now, so you had your previous jobs number come out, but everyone's expecting the Fed to raise rates soon, so that I think is priced into the market. Maybe not entirely. It's easy to say that, and then actually when the rates do come out and they're a lot higher than expected, then the market could correct a lot more than previously thought. But no one's really talking about any major moves. It's the middle of earnings season, and earnings are the primary focus of the markets right now. And you've had companies that have done really well with earnings, like Google, which I think is good from the long side, and companies that haven't done so well, like Whole Foods. So, as you can see, they just had a vicious decline from 40 to 36 within a matter of hours. But there are a few opportunities, and just going off of the previous plays from the last 2 weeks, BHI was one. Saw this around here for a short play, and it's been very choppy, but it has gone down. I feel like, though, if you did have some put options, you would have lost a lot of value due to time decay. So it could have been a win or a loss, depending on how far in expiration dates your options were. CUB was another one. This was a long play, oversold, mean reversion trade, high volume, down days to rally back into the 21 and 10-day moving averages, and it did pretty well. CNOB was another one. This is from the short side, very choppy. It hasn't really done much. Not really worth noting. COT, this is a play from the short side that I'm looking at right now. And as you can see, it had a false breakout above 1124, couldn't hold that, fell back. So it's technically at resistance right now from its previous high made on July 21st. And the interesting thing that I like from the short side here is obviously it's really extended away from its 10 and 21 period moving averages. And as we know, stocks can't stay far away from their mean. They tend to revert over time. So another point that I like about this is look at the volume down here. On this previous day, when the market was up over 10%, the stock traded over $20 million worth of shares. This day, it traded $16.8 million worth, and while it's smaller than the previous day, it's still about the same. So in terms of price action trading and volume trading, what traders like to see is that if it's the same level of volume, they'd like to see the same level of price movement in the previous direction. So that would mean that for this volume to be considered healthy, this high amount of volume, you'd want the stock to move another 10% higher. But in fact, it only moved 1% higher and had some pretty bearish price action trading at the end of the day. So I'm looking at this from the short side for a quick retracement. But overall, the trend is still an uptrend, and it's gone from $6 to almost 12. So you just got to fight this for just a couple days, but do not want to put this into a long-term short at all. This is Fitbit, recent IPO. I don't know a lot about this company, but I mean, it has a pretty nice looking chart. Retraced back down to the 21 period moving average. Had nice volume today, up 5%. New IPO, which means there are probably some really nice momentum players in this stock. And as you can see, it's gone up 50+% after its IPO. So I think this could be ready for another extended rally. X, US Steel Corp. This one is interesting just because it had a nice red dot reversal right here. Had an insane rally when it was upgraded by JP Morgan. They issued less than like a $25 price target. Or it may not have been 25, it was something else, but they upgraded their stock, issued a higher price target, and now it's kind of consolidating those gains that it's made. So I feel like if it can get above, let's say, 2065, then it could be set for another run higher. And It's coming back off of these severely oversold conditions, and that's why I think this rally was just so powerful and strong and swift. So we could see another extended rally there. And this stock, Google. Google is a great stock, I think, to own right now. Basically, it had an insane rally just like US Steel did from 518 to 663 off of good fundamental news, high volume. And it's retraced back about a third of the way, and it's holding that area. But what I really like about this is if you zoom back 1 year, even a bit longer, you can see that the previous high of Google was 615.82, which was made back in March of 2014. And so it's sitting right at that 620 level, which was resistance. Now it turns support. So I think Google can make another run higher if the market can respond to, and the Nasdaq can turn higher as well. So going back and chart the S&P, basically it's a trading range. There are some opportunities, not many. You just got to make sure that you're tactical and that you're using adequate risk parameters to make your trades. So thanks for watching and happy trading.